recently, Federal Reserve Chairman Jerome Powell said in testimony before Congress that growing the money supply does not lead to inflation. Now, this directly conflicts with the op-ed that Ben Bernanke wrote in the Washington Post in November of 2010, which said explicitly the Fed would prevent growing the money supply because that would be very, very inflationary. And yet Ben Bernanke back in 2010 was talking about pumping up asset prices of stocks and bonds with back then unconventional policy and the wealth effect. But Bernanke back then promised that the money supply and ways to measure the money supply are M1, M2, M3. Those are the more traditional forms that regular economists use. Those are generally how money and credit are measured. Now, unfortunately, because of stagflate tax lie, moving the goalposts and changing the rules, the way that these things have been measured, along with GDP, along with consumer price index or CPI, and along with the unemployment, all these formulas are being changed very, very often. Oftentimes they're being changed and we're not even being told about it. But recently, the Fed actually put out a blog post saying they're changing how they calculate the money supply as well. I got an email from a podcast listener telling me that they're doing this. They actually told people. So the only time we actually find out that they're making official changes like this are when they issue a press release or it's hidden in the footnote of a report or on the website saying that a change was made, but really they don't have to tell us. So they can change these PhD economists, the people in the central banks, the people in the Treasury Department or in charge of this phony economic data, and all these different governments can change all these formulas at will, or they can just stop reporting them, as happened about 10 years ago with the M3 numbers here in the US. So John Williams of ShadowStats has talked about this a lot. The M3 numbers, and people forget about this, the M3 numbers have not been reported for a long time. Now, there's still ways to find them and calculate them and come up with rough estimates. But for the Fed to stop reporting M1 and M2 or change the formulas, and on the Fed's website recently, I went to the St. Louis Fed website, and it says that the M1 and M2 were discontinued. Now, maybe they're going to change the formulas. It looks like that way in the email that I got from a listener that the Fed put out a blog post. But all of these things are all part of a problem with governments, central banks, a lack of transparency. And what governments and central banks, politicians, bureaucrats, central bankers can all get away with changing the rules, cheating, lying, and basically doing what they want. And all the rules keep changing. The average person who barely pays any attention to financial markets doesn't understand how often the rules have changed just in the last year or so. So the rules went to a new level of shenanigans in February and March of 2020 when the U.S. Treasury granted the Fed the privilege of combining for Enron-style special purpose vehicles off balance sheet. And this is probably why the Fed's balance sheet is not exploding anywhere near the levels that we think it should yet, despite how the Fed is now buying 70%, give or take, of all the newly issued U.S. Treasuries. The Fed buying $30 billion per month in mortgage-backed securities is nowhere near enough. Check out the amount of mortgage-backed securities the Fed is buying in just the last 3 or so weeks. It's exploded higher compared to the $30 billion per month that the Fed was buying, and that was a high number. And now the Fed is even starting to buy Treasury inflation-protected securities, a lot of them again, and the Fed already owned 20% of those. So the Fed is distorting all these different asset markets for different purposes. So to prop up asset prices, or to bail out pension funds, or to make sure that Wall Street bond salespeople and hedge funds make profitable trades. And this is how corrupt and rent-seeking and parasitical the entire system has become. But without changing these formulas, without stagflate tax lie, and the lie component here is what this is all about. Go and reread, and I've talked about this in prior videos over the last few months, the Ben Bernanke November 2010 op-ed in the Washington Post. Go and reread that, or if you haven't read it, read it for the first time, and then compare that to Jerome Powell's comments. And that just shows that the goalposts are moving, the rules are changing, and the Fed is doing anything they can to try to prop up asset prices, to try to cap interest rates, and to tell everyone that there's not any inflation. Meanwhile, this phony government economic data like the GDP, like the CPI that's supposed to measure inflation, and the unemployment rate does not reflect reality at all. In fact, it reflects reality less and less and less each and every year. And I've been covering many different topics like this for over a decade now on my YouTube channel and writing articles about it. So I've just seen how the rules get changed, how the formulas get changed, how Fed comments are always twisted, they manipulate with press releases, on and on and on, all the different ways. And it's always in the name of propping up asset prices, making sure the US federal government can borrow as much as it wants at as low as interest rates as possible. And yet here we are at over 28 trillion on the national debt, but for every 1% increase in interest rates now, that's an extra 280 billion per year if interest rates stay higher that the Federal Reserve is going to have to buy in US Treasuries. So every 1% increase now on that 28 trillion is another 280 billion per year in interest payments that have to be made. So that is why financial repression, that is why Japanification, that is why central banks are trying to cap yields and yet help maintain or grow the size of government so governments don't have to cut back. So governments can continue issuing more and more government bonds at the same or lower, normally lower, interest rates. Changing definitions or stopping reporting important things like money supply numbers after they've already gone parabolic, this is all a big part of the lie component of stagflate tax lie. It is important that a lot of suckers believe the phony economic data. Please like, share the video with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel, which just crossed over 40,000 YouTube channel subscribers, finally, after many years of YouTube censorship. The YouTube censorship is getting so bad now that longtime subscribers to my channel, and I'm getting emails and messages and comments below videos and Patreon messages that people are not getting new videos in their feeds anymore who have subscribed to the channel for many, many years. So please check the channel manually to make sure that you're getting all the new videos. And I'm trying to put out more despite the long list of health problems, debilitating health problems that I'm dealing with. And also, if you can afford to do so, please chip in $5 or more per month over on my Patreon. And unfortunately, the links to my Patreon are now being blocked by YouTube, both in the links after videos. I've been checking them. They normally don't work now, unfortunately. Occasionally they do work, but most of the time for a month now, they have not been working at all either. So YouTube censorship is getting absolutely ridiculous to make sure that I struggle to pay my bills. And as an added benefit for being a patron, not only will you help me pay my bills so I can continue to put out research, content, information, analysis, and financial education with these videos, and I'm going to be doing more and more interviews with experts. I've sent out emails to a lot of big name guests. I won't name the names yet, but I'm trying really hard to get some big name guests that I've never had on before, but also articles unique for patrons behind the paywall there. And there's over 150 articles on many different topics, including precious metal royalty and streaming companies, gold miners, silver miners, oil companies, uranium miners, and other commodity-related investments. So that's something you don't want to miss. I think it's a really good value, and I'm doing the best I can to create value in terms of the videos and research and analysis, despite my long list of debilitating health problems that are very difficult for me to do any work. But I'm doing the best I can, and I'm going to keep growing this YouTube channel, hopefully in spite of YouTube censorship, and hopefully I will be able to continue to create value and grow the channel much larger in the not too distant future.